Next is, we'll go for what is money laundering? What is money laundering? And this is a actually process. We'll be knowing what is money laundering. And because nowadays that the bankers, it is a responsibility of the banker to ensure that this doesn't happen. You should know the whole truth record and the genuineness of the customer. Everything now is on the bank. Why that is, why RBI is very much specific about it, we will see. You see, money laundering it is a process by which the origin of illegal fund generated is concealed. Suppose a person has raised some fund through illegal means, he will be concealing that. Now, suppose he will be selling some arms or something, or some ganja, anything, or you would have done unlawful, you would have killed somebody, for that you would have get some money. So he has made some money by illegal. He has generated fund through illegal means, and that he will be concealing. So the process of how that is known as money laundering. And why the how the bank come into the picture? Because once the money, we call it as tainted money or illegal funds, that he has to, that person, whoever culprit, whoever done has, he has to convert this into legal legitimate money. How he has to convert or make this to a legitimate money? That the money has to be credited to the account, on banking account. The moment the money gets credited to the bank account, it becomes legal money, legitimate money. Then he can issue checks and all, he can utilize the fund. So only through a banker this laundering will be completed. That is why RBI specify you should know KYC norm and all the things we have got, ID proof, address proof, everything is required. Now, because the laundering will be made possible, will be made only through the help of only through an account that is opened with a bank. So without a bank account, the laundering will not get complete. That is why bankers' responsibility and liability is more in respect of money laundering. And you know that the laundering that runs to amount also is very, very huge. Okay. So those are the process by which the origin of illegal fund is generated is concealed. This is known as money laundering. And a person this process will take, 3 stages. This also every time they will be asking in the exam. Every time this is being asked, that is number one, placement, layering, integration. These three are the 3 different stages through which the process of money laundering gets completed. Every time they will be asking in the examination. Number one is placement, number two is layering, number three is integration. I will explain what are the 3 different stages. Number one, placement. The placement, somebody has, we will just take a case where a person has raised some illegal money, he has some ganja or something he has sold, and he has some money, say 10,000 rupees he has got illegal money. Immediately, the number one is he will be keeping that separate. He will be just that, what is this? Keeping that, he will be safely keeping that money somewhere. He will not dare to take it out, because somebody easily can be found out, because any crime that is being done, suppose he has killed somebody and earned some money, that will be in the newspaper and all. So he will wait for some money, some time to ensure that news dies down naturally for some time. So that number one stage is he will be physically preparing to part with that money. He will be willing to place it with any bank institution. That is the first stage, which is known as placement. I will again explain. Placement is the first stage in money laundering, where the money that is being earned illegally, the party will be willing to part with. He will be willing to part with. He will be naturally, but he will be prepared to credit with the bank or financial institution. That is first stage. Number two is he doesn't want the source of money to be traced. For avoiding that, what he will do is he will do multiple transactions. He will transfer here to there to somewhere, So he will do. That is why this is known as layering. Multiple transaction he will be doing. This process is known as layering. The intention of doing the second stage is layering is to avoid sales, avoid to trace the source of. He doesn't want the source of money to be traced. So actually, suppose you are doing a multiple transaction here, there, from accounts of Christian to Madhavan, Masam to Tulasi, some other, you'll be doing so many transfers so that you will not be able to trace the origin of the fund. So intentionally doing multiple transaction is known as layering, and the purpose of layering is to avoid tracing the source of fund. So price one, already we have seen what is placement, physically parting with money. Number two is layering, where we'll be doing multiple transfers here and there within accounts. That is no layering one by one, one above the other. And the purpose is, the intention is, the rationale behind doing this is to ensure the source of money is not traced. Number three, this comes as the final stage in the three stages of money laundering, where the account will be finally credited to the bank account. That is not, it integrates, it gets merged with the normal banking channel money. So by the third process, that is integration, the money becomes legitimate money. So these are the three processes in laundering: placement, layering, and integration. Definitely one or two questions will be there. Like every time they are asking this question. Very, very simple, because all the questions are very simple. You need to just study one or two times. Read that, as Devi sir has told, Devidana sir has told. It will be in your mind. Guaranteed that you can get full marks. 70 to 75 marks is absolutely not a problem. Absolutely not a problem. And any extra will be only getting you towards 90. That is it. That is assured, because the topics are such that very easy, and you have to take it very passionately, interestingly. Only that earmark and study will be through it. That's why I'm explaining the concept of is very clear. Okay. Then is key elements of KYC policy, because this KYC policy, any policy is to be approved by the bank's board of directors. Any policy, all the risk management policy are being failed by the bank's board of directors. And all the policy, as you know, will be definitely in the bank site. Bank site is just like notice to the public, so that no customer, because here it is now that RBI is telling that everything has to be very transparent. Whatever is the bank's policy, whatever his rights, should be clearly known to him. That is why we have to, everything is being posted. For customer acceptance policy, whatever is a collection policy, all the policies are available in the bank site. So no customer can legally claim that he is not aware of. So here, as per the KYC policy, number one is customer acceptance policy is there. So this will clearly say that what are the types of customers that the bank will be accepting. That already is there. Already bank would have told that classification of customers as per the risk perception. What are the acceptance criteria? We will open account only for, actually the person has to come. We will not open any anonymous or fictitious accounts. We will not open. This is as per the customer acceptance policy. Bank has taken a decision. That is why the bank will insist that the customer should personally come to the bank, because we have to, bank is responsible. This is not anonymous. This is not fictitious. Earlier and all, the black money they used to do by opening so many fictitious accounts, so many anonymous accounts. Earlier, the bank was only interested in getting deposits. But now so many frauds have come because of this. So RBI is ensuring that there should not be any, bank is responsible for this. Bank should ensure, bank should have an acceptance policy wherein they ensure that they do not have any they do not open accounts for anonymous persons or fictitious. So what are the, to ensure that the bank will have their own guidelines or policy known as customer acceptance policy. Physically they have to come, only then we will be allowing to open the account. We have to say otherwise, if they are not, if we are, say, sick persons are there, the bank will be sending any representative to a house. We have to go ensure he cannot sign, at least we will take the thumb impression. So many policy, the guidelines are there in the policy. Everything is, you say, it is not to safeguard banks thing, it is to protect the customer. All the policies are only to help the customer, safety of the customer, because customers' hard-earned money is put in the bank. If the policies will only help him to increase, the augment the trust the customer is having with the bank. Okay. Next is the customer identification procedures. We have to identify the customer by whether we have to relay whether he is independent, what are the, so that it is possible by some source of documents. We have to ensure, we have to identify the customer, Mr. A. Suppose he says, I am Mr. A, and he will be giving some address. So the onus of proving that whether the customer Mr. A, who is claiming as Mr. A and who is claiming is residing there, it is, we have to identify whether that is genuine. So this is possible only by, we have got some ID set of documents. We have got some documentary, we call it as, we have to sort ID, address proof and ID proof. We have to ask for some documents through which we will be able to verify or confirm the ID of that person and also the address of the person. So for that, the bank will know, you'll be knowing we have got all the officially valid documents are there. Passport is a document. Then the driving license is a document. Main is Aadhaar, and e-Aadhaar also is a document. We have it. All these set of documents has been publicly put by the bank in the bank site. So these are officially valid documents, because already for issuing that, the government already would have verified. Suppose the passport is an accepted document, because already the authorities would have verified before issuing that policy. Aadhaar also same, valid driving license same. I have IT with the PAN card same. All these are issued by government valid and authorized government agencies, where the verification, that authorized verification has been already done. So these are the things that we require officially valid document. Based on this only, bank will confirm the identity of the address, identity of the person who is opening that account. So these are the things that already will be detailed in the bank's site also. And the next thing is monitoring of transaction. So the bank is responsible for maintaining the risk profile of the customer of the bank. And for that, we have to monitor, we have got some responsibility monitoring the cash transaction. You see, the RBI says that a customer, anybody who is by cash remitting more than 10 lakhs in a month, we have to give the particulars. We have to monitor and give the particulars. It's not a crime, only that we have to have abundant precaution whether the source is there. That is why anybody who is making money remittance more than 50,000, we will also ask for the Form 60. Because we should know, it is not anybody, never mistake that if a customer is not permitted to remit money more than 50,000. Only that we should know that who has remitted. That is why we are asking for either PAN, if not is not there, for the particulars Form 60. We should be able to trace, oh, this person has remitted this money. That is enough. It doesn't say that we should not accept. We have to accept. We have to definitely facilitate the customer transaction. Only that we have to comply with the norms prescribed, specified by the bank. So that is what we are monitoring of transaction. Because unless we have got a disciplined way of system of monitoring, we will not be able to ensure the compliance formalities. To ensure the compliance formality, we have got compliance by the Reserve Bank, it is there, by the Banking Regulation Act, it is there. So many acts specifies that. For that, we should have a pakka monitoring system. That is why we say that the monitoring satisfaction also is a key element in KYC policy. Last one is the risk management, because risk policy now it's the order of the day. Everywhere, everybody is concerned of the risk aspect. Even if suppose a person is there, the sir, I will money. Suppose example is best way of example is, see, somebody says that I am going to take a cinema. Can you finance for that? Of course, if it is, but here the risk is perception is more. Risk is highly risk. So the bank will think bank has got its own norms. So whether I will see, sir, whatever is the interest of rate, whatever is the interest we will give, sir, we will not go after the 100% profitability. Maybe it may click or may not click, but the risk is more. That real estate business, risk is more. So the bank has got its own way of assessment, its own way of assessing the risk that is prevailing in different types of industries. Here the risk policy, the bank is mainly concerned with the that updation of KYC AMC policy. It is very, very important. That is why we'll be studying, we got a slide, because we will not treat all account alike. The nature of account, wherever we have tasks for KYC documents, that differs depending upon the risk perception. Suppose the account is having highly risk, that compliance formality is highly more. We will be very diligent, will be very strong in that. If the risk perception is very risky nature, risk on that account is very low, there that our concept how that is monitoring will be very less compared to the high risk. So depending upon the risk nature, whether it is high risk, whether it is medium risk, whether it is low risk, the documents that the customer has to submit also that differs. So it has got direct link with the risk perception, right? So these are the 4 key elements as per the KYC policy. Now we will go for what is CTR, and these are the questions definitely they will be asking the examination. What is CTR and STR? CTR is cash transaction report, cash transaction report. As you say, the bank is responsible for ensuring reporting of such transaction where the amount exceeds rupees 10 lakhs either at a single instance or in multiple remittances. Even if a party is remitting 10 lakhs, more than 10 lakhs in a single instance, or through multiple, through the month, is making multi 50,000, 1 lakh, 1 lakh like that. The moment it surpasses, exceeds the limit of 10 lakhs, banker has liability responsibility to report under cash transaction report. That we have to report to the, that actually question they have asked, we have to report the director financial intelligence unit India, FIU India. That is what we tell, FIU India. It is located, the office is in Delhi. Now for information, and also that everything is now system driven. Anywhere a person is making remittance, big remittances, naturally that will be captured and the data will be in the bank, will be directly going to the system department which is monitoring. In every bank, they got their own that KYC and AML section is there. They will verify through the account. They will go through the account and they will verify whether it is genuine and all. They will be verifying. You will not, but everything is system driven. But here now for the academy, that for the examination purpose, CTR, the limit of 10 lakhs will be definitely asked. You have to bear in mind. And another question they can ask the examination is the CDR, the periodicity. When the CTR has to be set. All cash transaction report, that is what does that report contain? Transactions in cash done more than 10 lakhs per month have to be sent before 15th of the succeeding month. Example, the transaction, CTR transaction, CTR report pertaining to January should be sent on or before 15th of February. Examination, this limit, CTR, what is CTR is important. The limit of 10 lakhs is important. Then the date the report is to be sent, that is 15th of next month, that is important. And naturally, to whom you will be saying financial director, FIU, Financial Intelligence Unit, that is India, that is the agency to whom the bank is obliged to report. That also is important. Now, likewise, STR is suspicious transaction report. What is, suppose you come to, because major frauds have been brought to the notice of the authorities only after suspicion of STR. And here it is very, whenever a bank feels that transaction is of a suspicious nature, immediately the bank will be reporting. And actually that periodicity also, that says that within 7 days, that also they can ask the examination. What is the time limit, time period for sending STR, suspicious transaction report? It is within 7 days from the date the bank concludes the transaction is of a suspicious nature. I will explain once more. When question is, when a bank has to file a suspicious transaction report within 7 days from the date the bank concludes this transaction is of a suspicious nature. So this time frame, this is also same, naturally it will be. And for your information, often the government vigilance directorate and all, they find fault with the bank, say that often the STR is being filed, received by the vigilance and all, vigilance commission very late. So that prevents them to trace the money, because this fraudster, the moment the fraud is completed, the first thing is they will be leaving India. They will just go abroad. That's why they say that suspicious transaction report is very, very important. Unless it is done timely, it will not be of use to the authorities. They will not be able to trace the culprits. They will not be able to catch them. So the timely submission is very important. I am only highlighting that practically what happens. Okay. So the CTR, that cash transaction report, that is important, and STR, suspicious transaction report. And the time also here, the CTR is 10 lakhs amount and within 15 days from the succeeding month. STR is within 7 days from the date of your concluding this transaction is of a suspicious nature. Okay. Then we come to that plastic money. What is this plastic money? You know that credit cards. Now these plastic cards are substituting money, and almost all the major transactions are being covered only, not cash wise, not currency. So it has substituted currency. And the plastic money is mostly, you'll be knowing, credit card, debit card, and the charge cards are there. International cards are also there. So the difference is, in case of a credit card, what you are buying now, you are paying later. You are able to buy up to that credit limit sanction. That is a credit card. You can buy now, just pay on credit. That's why it is known as credit card, and you'll be paying it later. In respect to debit card, you are debiting your account now, paying now, and buying the goods only later. Just the opposite. And in case of a charge card, for the various purchases made during a month, the debit will be done at a particular single day as you have predetermined. Your salary is 27, say month end, every 28th or 29th or 30th, you will be debiting. So single debit is done for various transactions done throughout the month. Whereas in debit and credit card, in debit card, each and every transaction you debit immediately. In charge card, it is not there. It is just a group. Will be consolidated. Debit will be done for the various purchases during the month on a predetermined date. So this is all about credit card and debit card and SIM card and a charge card. And international cards, now that earlier that was only based on chip based card, international cards. Now everything is chip based. All the cards are, because the data, because our cards will be having a electronic chip implanted, where all the data are stored on the electronic chip. Now all the cards are chip based card only. Now it is also being standardized. It is also standardized so that it will enable you to operate anywhere. Now you see, I have got a debit card of State Bank. Now I can very well operate it. I am in US, I can operate it. Only that automatically my rupee account will be debited at a rate. Also, I will be getting the dollars here. Dollar payment can be done. So this is because of the common, that is, we have got a standardization of the cards. Because of that, it is possible. Okay. So this is all about plastic money. Then what is white label and brown label? So white label are the transaction, that is the plastic cards or ATM card that by the non-banking financial institutions. Now they have got their own white label cards. They have got linking is there. The best Muthoot Finance is there. They have all the cards issued by non-banking. These are all non-banking financial institution. Their area of operation is limited compared to the normal banking. That is why now that business is growing like anything. All the business, Muthoot Finance, Muthoot FinCrab, Cholamandalam Finance, so many that agency, non-banking finance companies are there. They have got that area of operation is different from our banking, and the cards that is being issued by them are known as white label. In respect of brown label card, what happened is only the machine is installed by that company. The company will be installing the machine. Under an AMC, we have to pay them. And the replenishment of cash and all the management of the cash should be done by the bank itself. So that is the difference between white label and brown label. So I will explain once more. White label is, that is that ATM transaction that is handled by the non-banking financial companies, whereas in brown label, the machine alone is installed by, given by the only maybe on the lease by the companies. So the bank, we are not incurring that expenditure, capital expenditure. Only that all other things, cash management is done by the concerned banks. Okay. Then we have to go for what exactly is a mandate and a power of attorney. Mandate is a simple instruction, a lender of undertaking. Normally, the difference is it is not stamped. It is not stamped. Actually, when you are giving, so in your bank also, you will be giving an authority to debit your account to your association or union for the subscription. That is a mandate. It is a simple letter of undertaking. It is not stamped. Where a power of attorney, it is in the larger sense. It is stamped. It is stamped and it is legally binding. That's the difference between mandate and power of attorney. Now, as I told you, KYC, depending upon the risk profile, depending upon the risk percentage, risk perception, that banks that documentation, our requirement, our compliances are also different. Because when the number of transactions are on the increase, day by day, so many accounts are where also increase. We cannot have a standardized approach. We cannot have a equal treatment with all the accounts because the size, it is volume is increasing day by day. So depending upon the risk perception, we will be differentiating that. So low risk, medium risk, high risk. These are the three types of classification generally a banker is doing as per the RBI norms. So nature of accounts that is categorized or that is brought under low risk category is salaried class. All the bankers, we are all low risk profile. Low income persons, naturally banker is a low income person classified as low risk, including daily wages, housewives, middle income, because pensioners. Here because we do not, because they have got a limited flow of income, steady flow of income. Neither it will have any too much of up or too much of down. So as of the account does not pose a financial risk normally. We never say they will not be out of risk. Can be there, it will be very minimal. Normally the chances are little. Then these are the nature of accounts. Salary, okay. Then coming to the medium risk accounts, real estate, the accounts maintained by the real estate agents, restaurants, merchants, that is that merchants, shop owners, tours and travels, the transport companies. So we have, it has been, these accounts are classified under medium risk category. Then high risk account category is real estate developers, arm dealers, diamond merchants, top executives, importers, exporters, politically exposed persons, and non-face-to-face customer. Example is NRIs. You are opening the account of NRIs without seeing them face to face. Based on that, suppose he says, I am Abdullah, I am Sharian, you are taking only that based on the credentials. We have got set up guideline, they have to give that stated copy of passport and all, then we are opening that. We have visa copy and all attested, we opening. But the risk is there because we are not seeing the customer face to face. And those accounts are categorized under his high risk category, non-profit organization. Non-profit organization also, they would be getting funds from the government, subsidies from the government. So the chances of perpetration of fraud in those areas are more. That is why it is being categorized at high risk category. So these are three forms basis of risk. Based on the risk perception, it is category. Low risk category, medium risk category, and finally high risk category. And of course, based on this, what is our role as a banker? You see, KYC, that know your customer, KYC norms has to be updated. That is low risk or medium risk, like that, or once in 10 years. Sorry, we have to get the KYC updation. We have to get the new documents, that a new photo has to be obtained, new document that is officially valid document, copy of Aadhaar or copy of anything. Our officially valid documents, we have to update in the account once in 10 years. We have to update it once a year. So that means that once in 10 years, we have to get update the ID and also the address. How that will be KYC compliance done? We have to obtain a fresh new photo, ID proof, and address proof. Likewise, in respect of a medium risk category, we have to do it once in 8 years, and high risk category once in 2 years. Once in 2 years. So the 10, 8, and 2, this often we will be asked in the examination. Higher the updation of KYC in respect of higher risk category once in 2 years. So these are all very simple. Normally they can ask it in the examination. 10.8.2, the periodicity of updation of KYC document they will ask. The banker customer relationship is a special relation where now the one question that already we have I have explained that STC and that obligation, that is STC's, the suspicious transaction report and cash transaction report should be sent to the director FIU India. The question will come that the report is to be sent to Finance Ministry, option A. Option B, the bank managing that, bank C, Reserve Bank of India. Option D will be Director FIU. So that the agency to whom we have got the obligatory commitment or obligatory statutory commitment to report is Director FIU India. Financial Intelligence Unit. I told you, can a principal revoke power of attorney? Can a principal revoke power of attorney? What is a power of attorney? You see, I am giving a power of attorney to you means I am giving you the authority to do something on my behalf in my absence. As long as I am not here, I am empowering you. I am authorizing you to do something on my behalf. That is known as power of. I am giving you the power. That is power of attorney. It is a legal document. There can be two types. Once that is one is of a general nature, general power of attorney that will cover all series of transactions. Another is specific power of attorney. The specific power of attorney empowers that party, power of attorney holder, to do that particular act for which it is given. So two persons are there. When I am giving the power of attorney to you, I am the principal and you are a power of attorney holder. Here the question is whether a principal, I have given a power of attorney to you, can I revoke? The answer is I am responsible. Suppose I have given a power of attorney on 1st of this month, October, and I have given you for a period of 3 months. 3 months I have given you. So it is October, November, December. Till December I have given that. So the power of attorney holder is holding that. Based on my power of attorney, already he is doing something. But suppose this October end, on that day, I say that I revoke the power of attorney. So the question is, whether I can revoke a power of attorney? What is given on 1st of October, whether I can revoke it on 30th October? Yes, I can revoke. But the problem is, who is responsible for the act of the holder? As long as that is from the date 1 I have given, 1 to 30th October is the date of revocation. Till that time, whatever the power of attorney had done, as a principal, I am responsible. So the answer is the principal is responsible for the action till it is revoked. Till I revoke whatever that had the order legally, only that he should have done that legally. Whatever the power of attorney has done legally during that period, principal is responsible. Another question for the same question, the answer could be also different. The principal cannot revoke future transaction. Can a future transaction be revoked? Yes, future transaction can be only revoked. Already past transaction cannot be revoked. So that is the essence. A principal cannot revoke past transaction done by the power of attorney holder till the date of revocation. He can only revoke future transaction. Only that past action should have been done by the POA holder within the limits, specified limits, authority given, that too definitely legally. Whatever that he has done legally. Suppose anything the power of attorney holder done illegally, then he will be alone responsible. Principal will not be responsible. That also is in the contract of agency, Indian contractor, it is there. I told you, this is a complexity where we have to get guided by various laws, various provisions of acts. All these things that we are now covering is based on Indian Contract Act. Okay. Next act we will be coming to the Garnishee order. Here some questions can be asked. Before we see what actually is a Garnishee order, we should know about what actually is a Garnishee order. Only then we will be able to answer the questions related to the Garnishee order. So I will take just an example. Suppose I have given you some money. One person, Mr. A, I have given some money. Mr. A is the debtor. I am the creditor. So I have given some money to Mr. A. Mr. A, he owes me the debt. So he is the debtor. Mr. A is the debtor and I am the creditor because I owe the credit. I have to get the credit back from the money from Mr. A. So I am the creditor. Two persons are there. Despite my various efforts, Mr. A is not giving me the money. Mr. A is not giving me the money despite my various efforts. One day just I come to know, accidentally I saw that Mr. A is coming out from the bank with some cash. Subsequently also I noticed. So by that I could confirm myself, Mr. A is having an account with that bank. He has got money, only that he's intentionally, purposely, he is not returning my money, paying back my money. So I got my own, what is this ways to believe that I have seen with own my eyes, he's coming out of the bank. But the reasonable conduct of the way that he conducts, it gives me belief that he has got account for the bank. Okay, we are only more related to the legality. Suppose I go to the bank and ask what is account, what is the balance Mr. A is having. Naturally, they will not tell because bankers' oath of secrecy is there as required under Transfer of Property Act. They will not reveal it. But I know confirm. I know that 100% sure that he has got Mr. A has got account with the bank. So whatever the amount, just we presume that he has to owe me only 5,000 rupees. What I will do is I will go to a court. I will go to a court and get an order freezing the money that Mr. A is having with the bank. So I will go to the court and get an order. That order will freeze all the money belonging to Mr. A with the bank. This order is known as Garnishee order. I will explain. So Garnishee order, since it is an issued by the court, the moment the court is involved, what we call is I am known as the judgment creditor and Mr. A is known as the judgment debtor. Another thing, this order is issued by the court. Garnishee means third party. Garnishee means the meaning is third party. Who is the third party here? The bank is third party. So who are the parties here? Number one, I am the creditor. Since judgment Garnishee order is involved, court is involved, I am known as judgment creditor. Mr. A is the debtor. Now we will call him judgment debtor. And court is the competent authority which is issuing the order. And what is this Garnishee? Third party is the bank. So four parties are there. Now I will tell what is a Garnishee order. You will be easily able to understand this. Garnishee order is an order issued by the competent court, okay, obtained by the judgment creditor. In this case, myself. What does Garnishee order do? It attaches the funds in the hands of the Garnishee or third party. Here it is the bank of whom? Of the judgment debtor, Mr. A. So again, I will explain. So Garnishee order is an order issued by the competent court, obtained. I have to go and apply and obtain by the judgment creditor, attaching the funds of judgment debtor in the hands of a third party or a bank or a Garnishee. This is the way it happens. But actually, practically, how that happens is the bank will not, once I go and apply for the Garnishee order, they will not straight away issue Garnishee order. What they will issue is, first of all, just like a professional. Everything, you will take a professional. Isn't it? Straight away, we will not take a photo. Suppose I have to give a photo to somebody. I will not go. I will take a photo, see the trial. If I am only satisfied, then I will go the fire. Just like they want to ensure that the court will issue a provision order that is known as order NICA. NICA. It is a temporary order. just to confirm. Based on this order, that Garnishee or the bank will confirm, okay, we are having an account, Mr. A, amount is there. Okay. After their confirmation, after the court getting the confirmation from the Garnishee or the third party or the bank, then they will issue a order absolute. It's the final order. That order is known as Garnishee order. So first the court will be issuing a order nisi, temporary order, provisional order, just to get a confirmation from the Garnishee or the third party or the bank stating that Mr. A, judgment debtor has got an account with this utter everything as required by the judgment creditor. So once the bank confirms the court, then they will issue a order absolute, or that is known as Garnishee order. This is how that operates. Practically, theoretically, two types will go, but practically one type. I will both explain. Theoretically, the Garnishee order can be issued for a specific amount. Here I told you that Judgment Mr. A, judgment debtor, owes to me only an amount of rupees 5,000. So I can obtain a Garnishee order for 5,000, or I can obtain that entire amount will be attached. Normally, it will be the entire amount. Normally, only theoretically I am telling, because the theoretically 5,000, why I am telling is we have got some objective questions. We have to discuss some questions in the next class. So unless you have got an amount, we will not be able to answer that. For that purpose only. So normally bear in mind, the order will be issued attaching the entire funds in the hands of the party. Entire funds will be all the. Now we will come to the legal explanation. Hope you have understood how what is a Garnishee order, who obtains it, what is the purpose of a Garnishee order. This I have explained. Now we will see that, as I told you, the Garnishee order will be issued for the entire amount. Now we will go for slightly legal explanation. What does a Garnishee order attach? We cannot blindly say, we cannot simply say it will attach all the amount. But here the legally it is explained, it attaches the amount due and accruing due or payable. This is a legal explanation. So what is an amount due? Amount due by the bank or accruing due. So these are the it that is in the hands of a Garnishee or a bank. Suppose the customer is having, Mr. A is having a SB account, fixed SB account, that money say 7,000 rupees is there. So it is the amount due by the bank to Mr. A. So it will attach the amount due, that all the SB account, whatever is amount, it is having 1 lakh or 10 lakhs or 5,000 or 2,000, whatever is amount, adds at the time of receipt of the order. If the order is received at 11:17 a.m., it should be whatever amount standing at 11:17 will be attached. Theoretically, when it was in the ledger account, a red line will be drawn at attached. Now we will be just blocking the account through the system. At what time? Amount that is standing in the credit as at the time of receipt of the order. So the receipt of time is very, very important. So we have to, because the court, they will be bringing the delivery book. We have to put affix a round stamp with time and all authentication we have to require. So the time is very, very important. So it will attach all the amount that is due. What is amount lying in credit? What is accruing due or payable? Suppose Mr. A is having a fixed deposit. Whether that will be attached? Yes, it will be attached. Only when it is due. Suppose the customer has paid, the Mr. A, the deposit is paid for say 6 months. So it can be attached because it becomes due for payment only after 6 months. At that time only it will be attached. So Garnishee order will attach all the amounts due, that is lying in the credit, immediately payable. That means demand deposits. And accruing due means time deposits. When it is to be paid on the date of maturity, naturally it will be attached. These are the two things that will be attached. Garnishee order attaches amount due and accruing due. And with this, we will stop today. And all the practical questions that can be asked in the Garnishee order, we will discuss tomorrow. Now we'll go for the question answer session. And whatever is your doubt, now we can ask one by one. Any doubts on all the topics that we have covered so far? Yes, Veena.
Sir, suppose one person has to pay some around 5 lakh rupees. If he is not having sufficient balance, then this Garnishee order cannot be applied, sir.
Yes, the problem is, suppose even if you are absolutely right, because I thought that we have to explain the practically the question will come like this. Because I will tell an example. That person is owing 5 lakhs to you. But at the time of receipt of the order, say along with time deposits and deposit, suppose the total amount is only 2 lakhs, nothing can be done. It can be attached. The amount that can be attached based on that order is only 2. That is the suppose in future
Oh.
after 1 month he will be depositing 10 lakhs. That cannot be attached.
Mhm.
So that is a drawback. It will attach only the amount that is due, lying in the demand deposit, SB current account like that, or
Yes, sir.
any
Yes.
fixed deposit. Suppose next say, legally what we tell is 11:17 is the time. Suppose he is afternoon 3 o'clock, he is limiting some 10 lakhs. Even that you cannot touch that up. So that
Okay.
is the thing. It will attach only that exact amount. So the time is very important. Actually, we have got we will be discussing next tomorrow. The Garnishee
Okay.
order cannot attach future credits. For that, what you have to do? You have to obtain another order. That is it.
Okay. Okay, sir. Thanks.
You are but absolutely right. Any other questions?
Yes.
And David Chandra, you can ask. What is the question? You can ask me.
Sir, actually, customer is having only CC account. CC account
CC
in
account.
back in. Okay, there is a balance in CC account. So suppose if you garnish order means
it cannot that you see in the CC account. I will explain. Very good, good question. You see, you got a CC account for 5 lakhs. The balance outstanding is now 3 lakhs. That means undrawn balance is 2 lakhs, isn't it? This
yes, sir.
The Garnishee order cannot attach that undrawn amount. It cannot attach. So CC account undrawn balance cannot be attached. Yes, more than one is permitted. Somebody was asking, can we issue more than one Garnishee order? But actually the purpose, because whatever is the Garnishee order issued, it is for the entire amount. Because this practically for some question answer purpose only I have stipulated is 5,000. Normally it will be for the entire amount only. So one order is enough now. That will cover all the amount due and accruing due of that person at that point of time. Subsequently, if that amount is not that sufficient to take care of your debt, clear off your debt, then you may have to go for obtention under the subsequent order. So at a point, it is enough that you can issue one order. That will be sufficient. Hope it is clear.
Yes,
Hello.
Sir.
Okay. Okay. Thank you, Bina. Any other question?
Whom we have to send STR, sir, suspicious transaction report. Whom we have to send?
Financial Director, Financial Intelligence Unit, FIU. So you see in that slide, I can see the Director, FIU India. These are only practically for the examination purpose. Actually, the system itself will take and your head office will be sending.
Can any same bank we can play or any bank?
Only sir, you see Garnishee, there is a specific bank. So the customer you have to obtain for this state bank, this branch specifically, you have to bring the Garnishee order. It should specify clearly.
Okay.
The Garnishee should be clearly specified. So you can have an account with so many other banks, but this bank, one bank can attach only that. No.
Oh, we have to
that is specific. The Garnishee should be specific. Yes.
Okay.
Sir, one small doubt regarding POA, sir. Is there any maximum period for POA, sir?
No maximum period. Usually it will have a purpose we have to ensure. Unlimited means, I am giving a PO for a specific purpose, maybe for my period of absence or something. Otherwise, the purpose will not be there. Depends upon the relationship, nature. So many things are there. It cannot be normally blank because I am out of station. So I want somebody to continue the transaction. So the nature has to be linked, So normally a period will be there.
Okay.
Just like that, open will not be given. No, normally not, because it is a risk from the sides of both the party, POA holder and also the principal. Which one is suspicious transaction? That is why legally, beautifully, the date on which the bank concludes this transaction is of a suspicious nature. That is the legal explanation. How this is a suspicious nature depends upon practical, depend upon the circumstance. Suppose Mr. A is remitting say 5 lakhs. I am asking him, from where do you get this credit? It is not commensurating with the earlier credits. He is not able to give a proper answer. Then it is suspicious nature. That is why we have to go on asking the. Merely it should not be proved along that backed by documents. Suppose somebody is remitting say 2 crores. We are asking, you say that, sir, it is, I have sold some property and it is a credit. Okay, you can ask for the credentials. You can ask for the documentation done or advance agreement. So it should be, genuineness has to be get convinced by the person. But if you are not satisfied with that, then only the suspicions will come. That law doesn't say whenever on what basis, what authority, on what documents the bank becomes suspicious. It depends upon circumstances. Moment it is confirmed it is of a suspicious nature, within 7 days you have to advise. The practically depends upon it. Okay, is Garnishee order on fixed deposit? Yes, because Garnishee order fixed is accruing due. Fixed deposit is the amount accruing due. Garnishee order will attach that amount in fixed deposit also. Only that it can be attached only when it gets due. That is on the date of maturity.
That Garnish order we discussed that accruing due means FD maturity date only, na?
On the date, correct.
But
on the maturity date only it will be attached.
The Garnish order and all cannot fix on the future amounts and all.
But future credits in the account. But this amount already is there. No, fixed deposit is standing in your name at the time of receipt of the order. At the time Mr. A is having that fixed deposit. Only that it is payable on the due date. So that will be attached. But another credit, new credit that comes to the account after that will not be attached. That is it. Okay. Any other questions? Very good question. Actually, FDR is in lien. Lien means, any lien to the bank, even if you are getting a Garnishee order, the bank has the right to settle off first. So in case of a lien, what you have beautifully asked, first you can close your lien. Bank, even if it is a court order, this is the only benefit the bank has got. First, the bank can set off its lien. Whatever is the amount due, you can immediately take it off. Balance, if any is there only, you can attach. It's a good question you have asked. Thank you. Actually, I thought of covering the practical case studies. Any other question? Okay, can we stop for the day? Already your time is there, isn't it? Okay, if your questions are over, we can see tomorrow. Okay.
If you like our content, do like, share and subscribe.